U.S. inflation, releasing inflation data for December. Underlying inflation, sure, it was up, the core rate, but less than economists had expected. Our guest says there's nothing really here that will spur more speculation about a rate cut this month. Let's get the latest from Blake Gwinn, head of U.S. rate strategy at RBC Capital Markets. Blake, thank you very much indeed for joining us. Now, just remind us, as far as I know, the market doesn't expect a rate cut from the Fed this month.
No. Markets have actually almost completely priced that out. We're basically less than 10% now. I think we were at around 5% probability this morning, which is about as close as you can get to zero this far out from a meeting. So markets really not expecting anything. We actually changed our call. We'd been expecting a January cut. We pulled that out after last week's NFP print. Really, I think it would have taken some further weakening in that December print from what we saw in November to get to that January cut. Didn't happen, so we pulled that cut out, and I think that's in line with where consensus is at.
Is the current level of interest rates administered by the Fed, is it stimulating the economy or slowing it, or can you generalize?
Yeah, I mean, look, we've been, generally, I would say a bit more on the hawkish side. I would think that the neutral rate, just given kind of what we've seen in the economy over the last few years, I think it's generally coming out of the pandemic been a bit higher than a lot of policymakers and a lot of people would expect. According to Powell, you know what neutral is by its works in a way, right? So you know if you're there by what you're seeing in the economy. And I think a lot of the growth and a lot of the positive results we saw in 23 into 2024, especially after the Fed delivered those rate hikes, I think that would tell you that the rate wasn't quite as restrictive as we'd expected. I think that some of those factors have come off a bit. So what we're probably seeing, I would generally agree with Powell's assessment that we're closer to that range of neutrals, or rather starting to be inside of that range of neutral estimates from the Fed. But I still think we're probably slightly above it if you're looking at kind of how the Fed's looking at things.
I was reading a beginner book about pickleball last night, and the advice was, be very careful before you launch an attack prematurely. So this is a labored way of getting to Trump's latest attack on the Fed. You think it may have had contrary results, and it may, in fact, in some way strengthen the independence of the Fed?
Well, to be fair, look, I'd prefer that these attacks weren't happening at all.
Right.
I think it's much better to let the Fed make policy independently. But we know the administration's been kind of going through these attacks. And I guess the way I'm kind of thinking about it, think about basically a vaccination for a virus, right? You give a low dose and kind of build up that immune system. And I think yesterday was some of the best proof we've had that there is an immune response. We saw senators, particularly Tillis in the banking committee, who could single-handedly really hold up a lot of Trump's Fed chair nominations. And he did say as much, that basically until this Powell thing is resolved, I'm not going to be forwarding any FOMC nominations. You saw the administration very quickly pull back. We got interviews from several administration officials in the morning, including Trump himself, who kind of said, hey, I don't really know what this was about, talk to the DOJ. So they kind of pulled back from it. And also, I think this is the strongest response we've had from Powell. I think before the last 48 hours, you could have reasonably thought that Powell could have had this view that in the long run care of the institution of the Fed, he may have gone quietly or kind of stepped away. I think the odds of that have gone down a lot. I mean, even if you look at some of these kind of prediction markets, the odds of Powell staying on and serving the rest of his board term, which does run through 2026. So we know his chair term will end, but he could stay on as a board member. The odds that he does that have gone up. So I think what this action over the weekend kind of forced was this immune response to kind of show itself. And so, if I'm kind of comparing to how I'm thinking about Fed independence now versus last week, I actually feel a little bit better that moat is going to hold.
And Bill Pulte, one of Trump's advisors, who was thought to be one of Powell's biggest critics, he also said, well, I don't know anything about it.
Yeah, and reporting that's come out does suggest that he may have been pushing a lot of these actions to begin with. So the fact that he pulled away from it, that also tells you something about how, what kind of pushback the administration is actually feeling on these actions. So again, I just think, I would prefer that we weren't testing the fences, but if we are testing the fences, it's nice to know that maybe those fences are a little bit higher and a little bit stronger than we might have thought a week ago.
And you do know, maybe we can put up a 1 week chart for the US 10-year bond yield. You do know that the market seems pretty calm about this thing.
Yeah, we walked in on Monday after those headlines had kind of surfaced with the curves a bit steeper. That's the kind of reaction, you would expect long end yields to kind of move higher on higher inflation, long run inflation expectations, kind of this uncertainty that would come through in term premium. You would expect to see that kind of action. But by midday, that had largely faded. And again, I think it is some of this response that we saw, the strong pushback from markets, the comments from senators. It is probably some of that helped, helped calm markets and kind of take some of that pricing out of the market by midday.
Thank you very much, Blake, as ever. Blake Gwinn, head of U.S. rate strategy at RBC Capital Markets.